Hey, folks, welcome to the weekend technical analysis update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video, as always, is sponsored by Realtic. All right, guys. So again, not a whole lot to update to you guys this weekend. Friday turned into a little bit of a gap down and then just a light volume float up all day long. We basically did the lightest volume of the week on Friday, and the markets ended up decently. Dow up 93 points, S&P up about 11, Nasdaq was up about 27 points. So, a little less than 1% across the board. And again, the positives here were that the market came into the day coming off a pretty ugly reversal on Thursday, as you can see right here. And again, we opened at the highs on that 3-bar surge and then sold off the rest of the day. The markets looked initially overnight and into the morning session like there was a little panic setting in again. A lot of talk about how the Chinese rate cut was a preemptive strike by China because the economic numbers that are going to be due out over the next few weeks are going to be so poor. And I think that kind of freaked out the markets and initially sold them from that gap up on Thursday all the way into the gap down on Friday. However, the talk about a Spain bailout started to push into the minds of the market on Friday. And basically, the word right now is that Spain may just go and say, hey, listen, we'll do anything you want. You guys take it over. You come in and you give us rules. We're going to do whatever it needs to be done. Just give us money, give us bailout. And that's the market likes that because essentially it's someone finally falling on the sword and saying, all right, you guys take over, just give us the money. The market wants them to get bailed out. The market wants everyone to get bailed out, just like the U.S. got bailed out and the banks got bailed out in 2009. And obviously, the market looks at the results from 2009 and where the market is now compared to then in the U.S. and says this is positive. Now, long term, we all know it's not so positive. We all know that there will be a reckoning day, but the market, again, does not care about long term. The market is a very short term entity, and that's really what retail investors don't understand. Retail investors may say, hey, listen, down the line, 5 years, 10 years, inflation's going to go crazy and gold's going to be the best thing ever. But honestly, why would you invest in gold if gold's going to head down short term and then head up in 5 years from now? There's way better investments, and the market that's how the market works. You got to look short term. That's why swing trading is such a great thing because you're targeting the short term with the charts. And long-term investing is essentially there's no reason to do it anymore, in my opinion. There really isn't. Okay. So the markets again ended right here above the trend line resistance area, kind of right into this little pivot high right here. And again, that's a little minor resistance. Obviously, going into Monday, we're going to watch this little pivot high from the high pivot on the gap up on Thursday. That's going to be a key level. Essentially, the reasons why the market will go up next week are going to be Europe based. Spain, if they come out and say, "Hey, listen, we need a bailout this weekend," that and the EU agrees. And again, essentially, why would the EU agree? Why is Spain going to do it? Basically, you're talking about Spain coming and saying, "Hey, we will do whatever you guys want." As opposed to some of the issues in Greece where there are a lot of people opposed. This would be just a one swoop in type. All right, come in, do whatever you got to do to our government and our spending cuts, and just give us lots of money. And it seems like Germany's not opposed to that as long as Germany gets some control over these countries. And the market obviously likes that. It's the first step in the right direction. Okay? Going to the daily chart, obviously a nice move up this past week. I think it was one of the biggest moves. I think it was, in fact, the biggest move up of the year 2012 for a 1 week period. Obviously, a monstrous bounce. My two swing longs right now, again, Facebook and JP Morgan Chase. I think JPM has a great potential to make a major move next week if Spain follows through and does ask for help this weekend and they get accepted. I think that would be a positive thing for all the financials, in fact, because a lot of these losses that are stemming from derivatives and so forth on their balance sheets could be curbed based on the bailout essentially coming into a lot of these countries, or at least starting there. Okay. Any sort of upside on the daily chart here, you're going to have this pivot high as your major resistance level, which is the 133.90-ish, 134 area. That would be first. believe it or not, we do have a chance, and I repeat, we do still have a chance to get to this level up here, which was that original target. Remember that original target on this initial move up that I thought we might get to? You still actually have a chance to get to that point. And again, I believe that point was a connector of this area right here, right underneath the 136 level, which is actually looking like an amazingly good level. Notice how it's the pivot lows right here from the head and shoulders pattern, essentially. In addition, it's also the 50 moving average. That would tell me there's a good major multiple reasons to have resistance there, or at least look for some shorts. And I would probably pick up the SDS or the QID at that point. Okay? And again, the reason being is, not only is there a moving average there, but you actually have pivot lows right here, and this is the original level that we coined and came out and said this is what we expect the market to get to. So if it eventually does get there, then that's still the spot, especially with all those other factors there. All right, let's take a look at the dollar. The dollar, obviously, here on the daily chart, had a nice little move up on Friday. But the key with the dollar, and again, this is where a lot of people don't understand the dollar. And let me just get rid of a couple of these trend lines here so you guys can follow along a little bit better. Technically, the dollar was up on Friday. UUP closed up 7 cents. But the key is, you might say, well, the market rallied and was positive. And the reason being is because the markets gapped lower because the dollar gapped higher. But look at the intraday chart of the dollar here on Friday. And again, let me just flip over to that dollar index ETF here, UUP. And again, you should obviously know, assuming you've been with us for a little while, look at this. All day long, the dollar fell. All day long. So you had the markets gapping lower, the dollar gapping higher. The dollar fades all day long. What would the market do if they're inverse? Obviously, if they're inverse, which they are, the markets would float up all day long. So you can really see how it's the intraday action that's the most important factor. And I've tried to explain this before, but let me just explain it one more time. The dollar will do whatever it does overnight based on Europe and the euro. It goes opposite, essentially, the euro. But the algorithms and the high frequency trading programs are pinned to the dollar in relation to during market hours. So even though the dollar gapped up huge, the markets had a small gap down. That's the nature of that's your starting point. So all you care about is that the dollar's here to start the day, and the markets obviously were down here. Okay. Now what matters is where it goes intraday, and obviously as it falls, the markets floated up all day long. Okay. So again, it's during market hours that the algorithms are going to trade, obviously, the markets because it's during market hours accordingly. Next up, let's take a look at gold, the GLD. Small bounce back today, or on Friday, I should say. Let's flip over to the daily chart here. And again, you gapped lower into the double bottom range right here. And then remember, as the dollar fell all day, what's going to happen to the commodities? They're going to float up a little bit. And the same thing happened on oil and on silver. The USO chart will flip to as well. And you can see gaps lower and then just floats back. And the USO actually ended up 8 cents after really tagging a nice double bottom. If we look at the intraday chart here, and let me just flip it over, but the intraday chart essentially opened right around that double bottom level. And if I zoom out a little bit, you guys can see this little pivot low right here, draw a trend line right across, and you essentially have a perfect support level that it opened at. And then it kind of chopped around there, couldn't break through. Path of least resistance is up in this case, as you can see how many times it hits, and it just can't break through. And it floats up, has little pullbacks, and then a nice surge up into the mid-afternoon session. Looking at some key stocks, folks, let's flip back to the daily chart here, and let's just look at some key stocks. Obviously, JP Morgan is one to keep an eye on here. JP Morgan is hammering on the 20 moving average. So this tells you that next week, most likely Monday, there will be pivotal action in the market. Monday, Tuesday, pivotal action. And the reason, again, why that tells you it is because of where JP Morgan is located on the chart. You're at the 20 moving average. It's not technically your first hit. That was the day before here. So now can it bust through? You're either going to pull back off of this, in which case the market's probably going to pull back off of it, or you're going to bust through. So again, it does tell us that next week and early in the week should be very pivotal for the markets. Remember, it's options X week as well, which means a lot of shenanigans will be played by the institutions. You got to be a little bit more on point. All right. Taking a look at Apple quickly here. And again, I'm not going to cover too much more because the No Hype Live will obviously cover a fair amount Sunday night when I do it with you guys as well. But Apple, again, right into that 50 moving average. So again, this is showing us it's a pivotal point in this market as well, because not only is JP Morgan, which kind of leads the Dow and the S&P, but now you have the tech stock Apple, which is essentially leading the Qs and the Nasdaq 100 and the Nasdaq up into the 50. So is it going to break out or is it going to pull back? Okay, I still personally favor a little bit more upside, but it's not. I can't tell you with a 90% certainty of that. And the reason why is because there's just too much going on with Options X next week, and there's too much going on with Europe. If something doesn't get worked out with Spain, that's a negative. Markets could go down sharply. If something does, they can go up huge. It's got this extracurricular because you're at this pivotal point in the markets, which is exactly what the charts are showing us here. It gives you that possibility of a major move in the market. The question is which way. I will ultimately be patient and disciplined, which is what we all have to be. And if you're not going to be it, you're just going to lose money. So you might as well be disciplined to wait and see where the market goes. When it hits criteria that means the trade that we decide to take is at 90% or better, or 80, even 80% and better is okay. But when it gets up to that level where you have an 80% chance or better of winning on that trade, that's when you pull the trigger. If not, you stay in cash and you thank the stock gods that you're smart enough to stay in cash while everyone else gets whipped up and down. Okay? And again, I'm in the money on my JP Morgan, a little bit out on Facebook, which we'll take a look at. Now, one thing I want to show you on Facebook is actually pretty cool, guys. Facebook was up 79 cents here, and I continue to hold my swing trade position. It's only 5% position, but nonetheless, I have to say the weekly chart is awesome on Facebook. Take a look at this, guys. All right. All right, here's the weekly chart, and look at that. 1, 2, 3-bar surge on the weekly with a possible reversal candle right here. So based on what I'm seeing on this Facebook chart, it should bounce this coming week. I have a feeling you're going to have a good chance of getting back to about $30. A lot will depend on the market, but Facebook trades somewhat in its own world right now, anyways. But that's my gut. My gut tells me you'll have a nice little up move, possibly as high as $30 this week. All right, at that point, I'll probably take off at least half, if not all, the position once it gets above 30. Okay. So nice little move there. If we go to the daily chart here, you can see looks like you're finally starting to make a little bit of a bottomish pattern here. Could be forming a bearish pattern, but the weekly is kind of telling me otherwise based on what I'm seeing on the weekly. Okay. So that's Facebook. What else do we want to take a look at here? Let's take a look at Google. See what Google's doing here. Google is up $2.22. Google daily chart is actually not very good. You know, while a lot of the other charts are telling us you're at a pivotal point here, it's not like Google's into a level like the necktie here or anything else. So for me at least, there's nothing going on there. If anything, it's slightly bearish, but hard to short anything until we at least get that move to about the 135.90, 136 level on the SPY. Okay. I think for the most part, let me just bring up the Qs so we can take a look at that. Since we looked at the SPY, the Qs are the NASDAQ 100 ETF. And you can see the Qs are actually a little stronger, while the spiders are, well, no, they're both pretty strong. But bottom line is, the Qs are above their 50. You pulled back off of the 3-bar surge on Thursday, and you closed just below, and now it got back above. So the one thing this is showing me is that we want to see if we confirm. To confirm, you have to close above Friday's high on Monday. And that would probably solidify a move up, in my opinion, to the 50 moving average here, which is at around $64.50, $64.60 on the Qs. At which point, notice how the pivot low right here, draw it across. Look at that, guys. I mean, that's some cool stuff. I love how the spiders and the Qs both match up in terms of the 50 coming into the little pivot low right here. That's got to be your target on the Qs for a continued move up. Okay? And again, while I'm giving you these targets, just be aware it's not as simple as just saying, oh, well, Gareth says the market's going to go there. I'm not saying the market is 100% going to go there. In fact, to me, it's about a 65-70% chance, which means you really don't jump on board recklessly on that. Do I mind having a 5%, 10% position here and there? A couple of them? No. Would you overload your portfolio? No. Why? Because we're in a down cycle. Going counter trend is one of the riskiest things you can do, as seen by stocks like JPM, which I was out on the money on for most of last week until obviously on Friday and Thursday and so forth. So that's why you're playing with fire, so you have to tone them down. You have to remember that being in cash is a position too, and it's a wonderful position when the market is whipping up and down and whipping the little guys out of the market. You're no longer anyone with us. You're not considered a retail investor, an average investor anymore. You're now considered part of the elite, and you need to strive to learn the methodology and become that. All right? You have high expectations here. I've kicked people out of the service before because I didn't think they were grasping it after a certain amount of time. I will do that again if I feel the need. All right, each and every one of us must excel. All right, don't rely just on my calls and all that stuff. I want you guys to understand the methodology. Many services out there, they just tell you what to do. I don't mind telling you what I'm doing and letting you follow me, but I also expect some level of understanding and some level of openness to learning. I want to create the biggest, best trading group here, swing trading investing group in the world. I want the methodology to permeate every form of the world out there, every area of the world. And therefore, I expect a lot from our members, just like you guys expect a lot from me. You guys expect a ton from me. Okay? So, again, it's a two-sided working group here of the elite. We help each other. I was on Friday, I was on Traders Life 24/7. I posted a couple Facebook scalp trades in the afternoon session that I took. They worked out perfectly. A lot of people made money. And to be honest, there was a trade on Thursday that someone posted on Facebook as a day trade in the afternoon on Traders Life that I took and I made money off of. That's what the goal is, folks. The goal is to help each other, to help learn. You have friends, you have family that are in need of help, you refer them to InTheMoneyStocks.com. You broaden the spectrum to people you trust, to people that you are friendly with, that you know need help, and we're here to help. All right, on that note, enough of my sermon here. Have a great weekend, folks. Thank you all for being members here. We look forward to another great week next week. Let's do it up again. And remember, folks, I'll see you at the No Hype Live Sunday night. Take care.